Hey traders, Nick Shaheen here looking at Ulta Beauty. They reported earnings last night and the aftermarket action was bearish, but I think it's recovering. It's almost flat by now. The market hasn't opened on the day after, the morning after I should say. So how the day ends is still up in the air. However, I still think that there is a trade there. I was hoping that it would open down at the lows. The overnight action took it down to 223, I think, 224, so right around here. And if you look left, this is about halfway as far as charts concerned. And this is about 1 year worth of action daily. Let's see here, somewhere around here, about halfway of this whole range, right? So this gives me something to shoot for. And when I zoom out, I see more evidence of how I can trade this. All right, so go to 5 years. Now we're looking at weekly charts. And you can see that halfway mark was right around here somewhere. Right? Oh my gosh, okay. I did not plan this. So it's right around that arrow that you see right here. So I put that arrow for a reason. I can't remember why, but let's see. Okay, so one of these earnings reports shot up to here, open gap below, and close the gap. And the arrow was, before it closed the gap, kind of like shooting for when will they, when won't they. So obviously, this proves my point here, which was the point I was trying to make. This zone is pivotal for about 3 years out of 5. So if this is 5 years, it's been pivotal for a while, let's put it that way. And pivot points, zones, it's a rubber band, not a hard line in the sand, are usually supportive on the way down and resistive on the way up. Why? Because people who fought over it before, they're going to fight over it again. So it's something against which I can sell. So if it had opened red this morning, I would sell against what other people are fearing and try to generate income. Where would I do it? I would choose anywhere below 210 because this is about 210. So that puts me in the lower end of the last 5 years, which was resistance before that. So it's a good place to start. Now, how do I catch a falling knife? If I didn't do options, I would have to risk $240 into a stock that may or may not rally. If it starts falling, I'm out of money right away. Whereas is the way I do it, I sell puts, which people tell you it's scary. Sure, but if you're buying the stock, it's less scary than buying the stock. It's $40 less scary. What does that mean? When I buy a stock, my money is out right here, $240 at risk right here. And if I sell a put at 200, for example, my money is not at risk until then. So I have a cushion from here to here, so 15, 16%-ish before I start losing money. What happens? Okay, so when I sell a put, I'm basically saying I'm a buyer at 200. If it falls through 200, in the next couple of months or while my trade is open. So that risk is open. It means I'm long Ulta at 200. If it falls, that put I sold gets more expensive. I have paper losses. If it doesn't fall through 200, I win 100%. If it falls 200, through 200, then I have to own it at 200. So if I own it at 200, then I can turn around and sell it. Then my profit or loss are plus or minus whatever price I sold it at. Meaning if I collect a couple of dollars, my break-even point is at 198. So I'm not losing money until 198. Way better than losing money from 240 down. You say you have stop losses. I will have stop losses below too. I can buy puts below it, shorter time to give me partial protection. So options are dangerous, sure. But just as dangerous, if not less dangerous than actually buying the stock at the whatever price. It gives me more courage to stay in my trade longer. I won't sweat the red ticks as fast as I would if I had spewed $240 to buy the shares outright. So the point is, this is a retailer. 22 PE, I think, trailing. Not crazy expensive. Not a screaming buy either, but not crazy expensive. And the comps are good, a little less than expected. I think we're 6%. And if you look at the comps, they're growing ticket average sales, and they're growing the actual transaction count. So they know how to grow their sales as far as attracting more foot or more purchases, and they also know how to upsell. Pretty good for a retailer. And up, I think 12, maybe 17% year to date. So it's not a disaster, a small dip. If it even happens, I think they're still going to open flat or green. So I wish they had opened a lot of red so I can get more money for my puts. Time-wise, I'll probably go to October. If not, if my timeline, if it's too short, I don't want to be that close to, I can even go lower than 200 and go out further in time to, say, December or January or whatever other contracts or leaps. Me, I like a good balance of short and medium, as short as possible without being too close to comfort. All right, Nick signing out. If you have any questions, you can email me at sellspreads@gmail.com.